Good news! If you're watching this and are still alive, you probably have time to contribute to your retirement. If, however, you are deceased, then I don't understand why you're spending eternal bliss or damnation watching a video about the Registered Retirement Savings Plan. You're a very odd individual, but either way, we're going to have a hell of a time today talking about RRSPs. So in this video, we're going to be explaining RRSPs, or the Registered Retirement Savings Plan. Now, it's maybe a little similar to the TFSA, but rather than it being tax sheltered, it is tax deferred. We'll be going on into detail to explain that later. Now, once again, they snuck in the word savings, even though it should not be used as a savings account. It should be used as a long-term investment account. Think about it, this is technically money for your retirement. So it should not just be sitting there, it should be working, because one day you're gonna be sitting there and you need your money working. Actually, my feet are kind of killing me right now, so I'm gonna sit, and hopefully this video will just make itself. It'll work for me. I don't know. Let's see. Whatever. Play the intro. All right. So, before we get started with all the fun and games we're going to have here today, if you could do me a favor and just please thumb wrestle with the like button, give a nice massage to the subscribe button for me, and also just tickle the bell notification icon. I really appreciate it. Thank you very much. Okay, so disclaimer, we're going to be splitting this video into two because, gotta be honest, it is boring and dry as hell. So we're going to split into two and kind of have some fun with it here. RRSP. If there's one thing I love, it's sexy government acronyms. It just get me so hot. Think of the RRSP as like this sexy government container that can hold anything tax deferred. Now what you want to do is you want to buy investments that will compound through the years, and then you're going to pay taxes on it later. Basically, you're going to make the older, more feeble, less employable version of you pay for your taxes now. So this guy is getting screwed. It's stupid. Alright, so who can open an RRSP? Well, to open one, you need to be a Canadian with a social insurance number, and you need to have a photo ID. There is no age requirement to open an RRSP. A parent or guardian may be able to open one for a minor, but they would need it to have worked and collected a T4, possibly working as a minor. A minor working as a minor.
Shit joke.
But is there such a thing as opening one too young? Well, the trade-off is that when you're young, you can take advantage of compound interest because you have many years ahead to grow your money. But at the same time, you're also young and are not earning that much. And when you are earning less, you are taxed less. So it may be best to save that contribution room for a time when you're working more, earning more, and you want to tax defer more. You're mostly better off to wait until you're working full time and are receiving a substantial income that you want to tax defer. It's probably best to start working towards your TFSA maximum contribution room. That's what I did first before I started dipping my toes in RRSP. I was kind of doing them at the same time, but I always prioritize the TFSA limit first. And that's because the TFSA is completely tax-free, but think about what works best for you, because I'm not a financial advisor. I'm a guy wearing a cutoff shirt with his own logo on it. Financial advisors probably have a suit and tie. Maybe it's gonna be like a pink salmon shirt. His name's gonna be Greg. I'm not Greg. Okay, so how much can you contribute to an RRSP? Well, you can contribute up to 18% of your earned income in the previous year, up to a limit. Now the limit in 2020 was $27,230, and the limit in 2021 is $27,830. The money limits can be found on the Government of Canada's website. I will leave that in the description. Please consult that website as the limit changes from year to year. Now, a new contribution room will be added to any previous contribution room you had from previous years. It's best to go on the MyCRA site to check your personal contribution room. This can be found on your notice of assessment as well, which you'll get in the mail, and you can also find that on the CRA site. Now, if you don't have a CRA login, you can use this sign-in partner link, and you can sign in using your online bank username and password if you use one of the institutions here. Now, here is something important to note. The RRSP contribution deadline is 60 days after the previous year. If it falls on a weekend, it will be the next business day. So for 2021, it was up until March 1st to contribute for the year of 2020. Important to note, Now with the RRSP, similar to the TFSA, you can open as many accounts as you want, but the contribution limit lies with you, lies with the individual. Contribution room is cumulative. It's adding up everything you have with different accounts. All right, I can see you nodding off out there. We're gonna shake things up with a brief musical interlude. Ladies and gentlemen, the studio band, Mr. Big Matty Maestro.
Big Matty Maestro here. I'm here to play a song dedicated to all you retired folk out there. I want you to know that you're near and dear to my heart. And even though you're physically just disgusting and your body is decomposing, you're still beautiful. You're getting old, so old. You've been working so hard, saving as much as you can. You need a registered retirement savings plan. Oh yeah, registered retirement savings plan. Oh yeah. Oh, it's all going straight to the tax man. Oh, he'll take everything that he can. And in this man's pursuit, well, he just might wanna contribute to his own registered retirement savings plan.
Wasn't he great? No. Anyways, how does one open an RRSP account? I have mine on Questrade. You'll need your social insurance number and a photo ID. You'll also need $1,000 to open up your account on Questrade. If you do not have that, maybe save up and come on back. How do you fund your account? Well, you can use online banking or an Interac e-transfer. You can also choose pre-authorized deposits where you're making regular contributions. Again, before you do all this, check CRA, or you can check your notice of assessment. So how does an RRSP work while I'm contributing, while I'm stacking that cash? Well, if you earn your income from a job throughout the year, your employer will be taking money from you and sending it to the government. This is withholding tax. You know, when you look at your pay stub and you see that giant deduction that was just ripped out of your smooth, moisturized hands, that's withholding tax. It's like pay-as-you-go taxes where your employer is paying money to the government as a credit towards your income tax. At the end of the year, you'll either receive a refund if you over-contributed, or you'll have to pay a little more if you didn't pay enough. So why does this matter? Well, your RRSP can help you reduce your taxable income. By reducing your taxable income, you are taxed at a smaller salary and technically taxed less. So let's say you're someone with an income of $40,000. Let's say your income tax rate, for the sake of easy math, is 20% all in. Now that means you would need to pay the government $8,000 in income tax. $8,000 is 20% of $40,000. Now this is what you would have to pay if you contributed nothing to your RRSP. This is what would have been paid throughout the year, and then depending on if your employer paid enough, you would pay more or you would get some back. That is what your total income tax would be for the year. Now let's say same figures, but instead you contributed $2,000 to your RRSPs in that same year. This means your taxable income, rather than $40,000, is now $38,000. With your income tax rate at 20%, this now means that you are taxed $7,600 rather than $8,000. So that's a savings of $400. Now we have what is known as a graduated income tax system. Now that doesn't mean that the income tax went to school and got a diploma.
Shit joke.
But essentially what it means is that people who earn more are taxed at a higher rate, and those who earn less are taxed at a smaller rate. These are called tax brackets. By contributing to an RRSP, you reduce your taxable income and you could maybe even slip into one of those lower tax brackets. These brackets can be found on the Government of Canada's website. I'll leave links in the description for the federal and provincial/territorial income tax. You need to pay both. That sucks. Okay, so why should you open an RRSP? Now, depending on your situation, you may need to supplement your retirement income. Figure out what you'll need to live on and what money you estimate that you'll have coming in. Your income during retirement could consist of CPP, Canada Pension Plan, and OAS, Old Age Security. But you shouldn't just be reliant on these sexy government acronyms. You gotta also fund your own retirement. The most important thing to take away from all this is that you will need to fund your own retirement, and this can come from your personal savings such as your RRSP. So you have to build a nest egg that's truly going to take care of you. Whether it's RRSP or TFSA, most important thing is that you are growing money for yourself. Okay, so the next video is going to be a bit of review of what we talked about here, but we're also going to go into some other important questions, such as, am I able to touch my RRSP money before I'm retired? Are there ways to do that? And also, what does it look like when I touch the money? What does it look like when I want to start receiving it as income? Do two guys named Tony and Frank just back a van into my driveway and just start offloading cash? Is that how it works? Do I go to the dock and I pick my favorite boat and that's it, I'm retired? Well, we're going to answer those questions. Please come back for part 2 of this and we're going to have a fun time.
Shit joke.
We also have our free tool called Whoop Assets. The link is in the description, so open up a can of Whoop Assets.